Welcome to Markets Now. I'm Michelle Rook along with Tommy Grisafi, Advanced Trading, and we ended the week with grains and cotton higher. We were lower for the most part in the livestock futures. And Tommy, let's just talk a little bit about the rebound or the recovery we saw on Friday here in the grain trade. How much of it was tied to the lower dollar? How much of it was tied to maybe some relaxing of these China COVID policies?
I would say a lot of it, and I guess I'm disappointed that we didn't rally more. So we have to keep an eye on policy, obviously South American weather, and this dollar. Biggest move in 3 decades to the downside of the dollar, which should make our grains more affordable. I was actually looking for bigger moves. I wasn't bulled up, but when you see the dollar that week, you say, "Hey, go buy anything; it's on sale." And maybe people were more interested in the stock market. Obviously, that was the greatest performing asset here this week was probably the Nasdaq having that incredible bounce this week. Of course, it was the most oversold asset also.
So there was some money flow things going on there,
There
obviously.
was a
Money
little
going
money
into
flow.
equities, maybe coming out of commodities on Thursday. But like I said, the grain sector rebounding. Do you think that we'll continue to see that maybe going into next week? Or are we just going to stay range bound like we've been here in these darn grains?
Great point. And speaking of range bound, how do you tell if the markets are going to be range bound? You look at option volatility, and option volatility collapsed midweek and at the end of the week. And what I mean is if you go look at the money, say December corn's trading 650, and you go look at a 650 call and you look at a 650 put, those values collapse, meaning people aren't as worried that we're going to move away from that 650 level. Of course, those options expire in a few weeks. So great point, Michelle. How do you tell? Are we going to stay in the range? The board of trade corn options pit, there's no pit, but the board of trade options quotes give you the feeling that we're going to be in about a 30-cent range here till the end of the year. Now, of course, we'll probably be up more than that on Sunday based on a headline. And we're in a war. There's a war in Ukraine. We don't have physical soldiers over there, but we're sending ammunition and money by the day. And there's a lot of turmoil in the world. So keep an eye on South American weather. Yes, the dollar's important, but didn't have as big of effect as I was hoping.
All right, so let's talk a little bit about money flow, though, going forward with, the CPI data being digested, what you talked about in terms of, money flow maybe into equities and out of commodities. Where did the commodities land in all of this? What's the pecking order going forward now?
That's a great question. Let's be perfectly clear. We still have inflation. So the fact that the CPI number wasn't as hot, go to the gas station, gas is going to be expensive. Crude oil's up. Towards the end of the week, it was up $3.50 a barrel. Look at groceries, still expensive. You're seeing some things like chicken calm down and some other things, yet you're seeing eggs go through the roof. Interesting article I read just a little bit ago that eggs were exploding higher while chicken prices were dropping. So a lot of things out there. This money flow that you're talking about, commodities, I think one as a speculator, someone has to be very careful getting short commodities, going home over a weekend and thinking it's going to be okay. Now, that's totally different than someone who's a producer, someone who's going to grow Nov 23 beans, Dees 23 corn. I think it is time to put your hands out and be a seller. You want to be a seller of Nov 23 at 14, in my opinion. Now, of course, we had clients sell Nov 23 this week as it approached $14 again, and we defended it with some call options. So we're trying to get the best of both worlds, Michelle, where we have a good cash sale and still have that upside. With the money flow you're talking about, I will tell you to go back to Thursday to see corn close on the dead low. Now, we had the Goldman Sachs roll, where
Right.
Goldman Sachs rolls its positions, but to see corn close on the dead low and the Dow to close on the dead high was just wild. So it wasn't a pure flight to quality that they bought every asset. They bought some assets that looked like the stock market was the big winner for the week.
Okay, so we talked about things, grains moving sideways here. Cash basis levels, though, are pretty strong in the West. What are you telling producers right now? Because there's not a lot of farmer selling going on in some of those areas.
Correct. And I'm telling them you don't sell your corn, wheat, and beans at the Board of Trade. You sell it locally. Find an end user. It's a great time of year. The snowflakes are flying up in North Dakota. Once those bins get full and the snow starts flying and it's cold, this weekend will be a cold weekend. And all of a sudden, if you just got done putting that grain in a bin, you may not be in such a hurry to take it out. And that's where the cash market is probably going to way outperform the futures market. So there's a separate trade, right? We know where the Board of Trade is. That part's easy. But where are you going to physically deliver that bushel? That is the art of grain trading, Michelle.
Yeah. Is there a lot of upside potential in corn and beans when you consider that our exports are behind pace and we've got this big South American crop coming, at least in Brazil?
There's still a lot of upside. But I will tell you, when we came in a week ago and we had that headline that Russia had changed their mind on that trade deal, and we had that huge giant open, within a few days the markets were trading lower than that gap open on that Sunday night. So I'm noticing rallies are meant to be sold here.
Right.
We do have potential to go up, and the options market's telling you that people are looking for next year. December $10 calls already for next year have quite a value. So are you a buyer of those or a seller of those? Depends where corn's going to go. I wish I knew. But people are still worried about the upside. I will tell you this, though. We're on like month 25 or 26 of this bull market, maybe 27. I've lost track. But typically, we never, but it is happening, have this long of an extended great bull market in grains. And what you're seeing, Michelle, one of the greatest benefits of this, and you see it on your show, you report about it all the time, farmland prices are still hitting record highs, even though commodities calm down a little bit.
All right. Well, you mentioned bull markets, and cattle have been in a bull market. We pulled back here this week. Do you think the highs are in for the time being, or where do you see the market going?
I see cattle as a very dicey trade into the month of December. End of November, December, cattle get dicey, very thin. I wouldn't go so far to say that we can't go back up towards those highs, but now looking back, those levels we hit in feeders several months ago, oh, I bet you people wish they had more sold up there. So as you know, when the markets come down, look at hogs this year. When the market's exploding up, you wish you weren't a hedger. And when the market collapses, you ask yourself why you didn't sell more. At some point during the day, the cattle rancher has to wake up and say, am I a hedger? Am I a seller? Do I want to be short futures? How do I lay off some risk? If they don't want to be, they're going to get what they get in the end, Michelle. And that could be a lot of different prices.
All right. Appreciate it. As always, Tommy
Thank you.
Grisafi with Advanced Trading.